Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our trading room recording on Thursday, the 15th of July 2021. It's not the month I'm querying. I'm just wondering, is it Thursday or is it Wednesday? I think it's Thursday, guys. I should have checked that before I started speaking. Yes, of course, it's Thursday. There we go. Yesterday we were waiting. We had a look at these yesterday, and then we're just waiting for the Bank of Canada interest rate decision to come in. As with most of these at the moment, guys, they're not moving their interest rates, but we're looking to see what their underlying policy change is, because you'll get a reaction months ahead of them actually doing something, guys. I'm more au fait with obviously with what the Fed's doing, but you'll find that most of the rest of them be taking a pretty similar line. So as we look through the charts today, we'll have a look and see, is there any reaction to that, either positive or negative? And if we've any interest in it, then we'll go and we'll search around for a news article and see what other people are saying about it. Okay. Today then, we have employment change and unemployment change in Australia come in slightly lower than expected, but it's still a good move in the right direction. Although I noticed that I think it's Victoria has locked down again today. I heard a story there earlier on Bloomberg. I didn't pay much attention to it, but now that we're talking about Australia, it's popped back into my head, guys. And even though that's in the red, it still managed to bring unemployment rate down by 0.1%, guys. They didn't get the really bad lockdowns that the rest of Europe and America and a lot of other countries had, guys. They kind of got off a little bit light, but they're an outdoors type place, plenty of sunshine, not necessarily a dense population. Could have something to do with it, and then they're an island, guys, so maybe that helps. China GDP growth rate came in at 7.9, forecast 8.1. Still not bad, guys. It's a good move in the right direction. And then UK employment change, that's not so good. Forecast 90,000, only came in at 25,000, guys. That won't necessarily be positive for the pound. And then we're just waiting for New Zealand inflation rate to see if that move on the New Zealand dollar the other day is going to continue to move in the long direction, long for New Zealand, or whether the correction that's now occurring is going to continue. And yet again, we'll have a look at the chart on there. I'm going to try and keep this brief today, guys, because I do have a tendency to make these a little bit too long. And I know you guys can't spend an hour a day unless you're learning. You're listening to this to try and pick up tips and hints and ideas, guys. But if you're listening to this to get my forecasts, then it is a bit drawn out. So what we'll do next week is we'll start to put out little 10-minute summaries. The things that, here's what I'm looking at today, here's a possible trade, etc. So for those of you who want to just know what the forecast for today is, then we'll put it out that way. But I do this every day anyway, guys, because when I go through this, it gives me an overview of what's going on, to the best of my ability, an overview of what's going on in the markets every morning. And then that enables me to build up a picture in my head of what I'm looking for, where the opportunities are. Doesn't mean I get them all, but I get enough to be going on with, as it were. Kind of like you're filling your basket up with things to look at. Okay, so on to the charts. Let's just start at the top as usual, and we'll have a look at the NASDAQ. Now, there is a little bit of a quandary going on here, is that the NASDAQ's continuing up this week, guys. Maybe run a little bit flat, but it's certainly not correcting. And yet, when I go and look at everyone else's account, The people that I keep an eye on, and that's usually traders who have good track records, like myself, they're all drawn down this month, guys. We can have a quick look at it. Let's go over to here. At the moment, I'm down 1.38% for the month. Never happy with that, guys. But it's good to, if I was drawn down and everybody else was in the positive, I'd be worried. But if we go and we look at the likes of Jay, he's down 4, but remember he's fully invested. Oh, sorry, it's not there. It's on the portfolio. He's 99% invested. I'm sitting with 50% cash, guys. So that makes sense to me that his drawdown's a little bit over double what mine is, because he's got twice as much money in, guys. So I like that correlation. Let's go and see who else we can look at. Let's just go backwards here. Right. Going good. Not sure who this is. Oh, Wayne Ryan. Also another popular investor, 555 copiers. You can see there where the stats are. He's down 8% for the month, guys. He's not doing well this year. Not entirely sure what his strategy is. I haven't looked carefully at it. Could be cryptos, guys. The cryptos haven't been doing well this year. So he's lost a lot of copiers. Is he just having a bad year? How did he get that amount of copiers? 4% and 6%. There you go, guys. It just shows you. Okay, let's not analyze that at the moment. But this is all good stuff as well, guys. You can do this for yourself. To learn off the back of what. There's two ways of learning. One is learn what people are doing that's correct, and then also learn what people are doing that's not working. And obviously you try to do the one that's correct and avoid the one that's not working. Social investor, down 0.62 this month, which isn't too bad, but 3.56 for the year. These are people with good track records, guys, that we're looking at here. And lots of copiers, 8,000 copiers. Just doing okay this month, but not so good the last couple of months, guys. But overall, 44% for the year, which is fantastic. And what I would do is go and look at the portfolio and the portfolio history. Just try and see, is there anything standing out that would make Doge. So sometimes you'll find people who this year have really good results. It's because of one or two things that NASDAQ overall index, trading the index up 44% on that. Doge, well, they're only up 9%, but the fact that they're trading that makes me think that if you go into the history, you may well see, CI. Well, those are all losses, guys. Clearing the decks, fair enough. US dollar a while back, Bitcoin lost there 17%. Anyway, we don't have the time now to look at that, but it'd be interesting to go and see how George managed to get his 44% for the year. Okay, guys, let's move on. So the point that I'm making out there is that despite the fact, now I know that if we just look at, say, Jay Nemesis, I know that he's basically 90% invested in the NASDAQ. And the NASDAQ's been going up, and yet his account's down 4% for the month. It's a bit of an anomaly. So you maybe got to look at the underlying and say, well, what's pushing the NASDAQ up? And I think it's big tech. It's your Microsofts, it's your Apples, it's your the Amazon, etc. And then all of the growth stocks. Remember, they're not growth stocks, guys. Those are now becoming value stocks. All of the growth stocks are the ones that are getting thumped. Remembering that the bond rates are dropping, bond yields, should I say, are dropping, which means money's going into bonds, guys. So there's money coming out of somewhere, and it's going into bonds. And I think it's potentially the start. Now, I don't mean today and tomorrow, but over the next few months could be the start of a period of drawdown on all the markets, guys. And I'm a little bit concerned about it because I want to get some money off the table without, giving up too much. So I'll have to have a think about that. We'll talk about it over the next few days if that's what I decide to do. Because you buy the dip, guys, sell at the top and buy the dip. The difficulty is when you're not in the green, do you take the loss in the hope that the dip comes? Dodgy, but we'll talk our way through it over the next few days and weeks, guys. Okay, so Nasdaq's up, flat yesterday, but up. Dow Jones didn't really move up yesterday, but it hasn't dropped either. It's kind of a little double top situation. Wouldn't be surprised if we got a bit of a drawdown on there, guys. S&P is up there, hasn't moved anywhere this week, as it were. I assume, this is the 1 hour. 13th, 14th, 15th. Even though this is a 1 hour time scale, need to move in a bit closer. So it's been running flat this week, folks. Nikkei, a little bit of a drawdown in the Nikkei. Looking at the overall structure, looks like it wants to take off. That doesn't mean that structure can't continue for another while, guys, until we get the breakout. And that's the thing. It's always on the timing. So sometimes you got to buy things right through the dip and then come out the other end, which I suppose is fine if you're fully invested. But I'm sitting with 50% cash, guys. I'm kind of waiting for the drawdown. And there's different schools of thought in that. I think once you're fully invested, the idea of taking money off the table because you think a dip's coming isn't necessarily a good idea. But remember that I only financed the account properly this year. So at no point have I been 100% invested. French, in that same correction. German, running flat. Wouldn't be surprised if we get a drawdown before a breakout. China, nice little move up there in the Chinese stocks. But as I've been saying over and over again, it's the if-then situation with this one, guys. Given, and I don't trade the indexes, by the way, I just like to continue to repeat that because I know not the same people don't watch all the time, guys. But given that drop, I wouldn't be surprised if we got a bit more downside here before it went. It's tempting to think, well, that's the breakout and it's going to go. Maybe it turns out that it is. And if you're interested in Chinese stocks, then perhaps you go and look at the individual charts and decide for yourself if there's a correlation between what's happening here and what's happening in those charts. And if things have, if they've gone up like that and they've been, not dropping that far, guys, and they've been dropping, then maybe there's reason to start thinking about them down here. The only one thing I would say about them is there's this potential trade war still going on between the US and China, and also Chinese regulators seem to be putting a pressure on some of their tech companies, guys. So I would stay clear. The only thing I'm in is Baidu, and to be honest, I wish I wasn't in it because of those worries. Aussie's still running along flat. We talked at length yesterday about at what point will it break out. It could happen at any point, guys, but I would suggest that the closer it gets to that trend line, the higher the probability is that it's going to go long. And the Russell, still running flat. It's been running flat the whole year, folks. But I do think that eventually it will break out. But what downside there is to it before it breaks out is what we'll be keeping our eye on. I don't trade anything out of the Russell because eToro don't list anything out of the Russell. Let me just clean this one up quickly, folks. We did a lot of talking here yesterday. That's the reason why I make this short today, guys. You know, in the past, I've listened to people for over an hour at a time, but it can be quite draining, and it depends on how much time you have and what your reason behind listening is. Okay, so I'm still waiting to see if this is going to turn out to be an ending diagonal. We had the move up the other day when I put the chart out. Where's my chart? Chart's in there somewhere. There's a chart there. Oh, you know, if I've one complaint about TradingView is that they make these little triangles far too small, guys. We put this out the other day, and the day that we put it out, obviously we had the I was going to say the positive news. It wasn't. It was the inflation figures for the US, which were higher than expected. I listened to a lot of people over the last few days, guys, on that subject on Bloomberg. A lot of them are saying it's transitory, and some of them are saying no, we don't believe it's transitory. We think some of it's transitory. So they disagree with one another. But the Fed have come out again. Chairman Powell last night was talking to a select committee, and he was basically reiterating what they've been saying all along. They're not going to have a knee-jerk reaction. They don't want to surprise the market by suddenly starting to do something that they said they won't do. So it just depends how long he can stick to his guns for, guys. If he sticks to his guns, we'll see a downside movement on the dollar. So what we have is the spike up, but since then it's dropped again, guys. We're still a little bit in the red. But I'm hoping we at least get a 50% retracement in that. But we'll have to see. And there it is, live, looking for a bit more downside to that. If that isn't an ending diagonal, what could it be? Well, of course, it could possibly be a running flat, guys. You know, you're coming up and you get that, which is momentum to the upside, and then you get a breakout long. So there's always a worry when you're trying to trade an ending diagonal short that it turns out that it wasn't an ending diagonal and it was actually a running flat which broke out. The reason that I'm still quite keen from a technical point of view that this is going to go short is because of that massive divergence, guys, on the 4-hour MACD. Because of that, that's typical. You don't see that in a running flat, guys, but you do see it in an ending diagonal. It's that beautiful peak. You get a 1, 2, 3, and then it goes. And we had it here as well in the opposite direction. 1, 2, 3, and then with a little bit of messing around, then eventually it went. You can see there, I was declaring it an ending diagonal. I traded it long through here, but when we got these drawdowns, each time it come back down to zero, I got out, and then I missed the move up, guys. And this is, sometimes you really got to have the courage of your convictions and just give things time. And because that would have been a really nice trade there, guys. And so it's the same here. I don't want to, chicken out of this trade, and then in 2 weeks' time, it's down there, and I go, hey, well, I called it, but I didn't trade it. So what happens if it goes off in that direction? Well, I have a stop loss up there, and I'll lose a little bit of money, guys. Okay, nothing to worry about. Euro US, obviously, exactly the opposite of DXY. Well, exactly is not true, but it's a pretty close correlation between this and DXY, because DXY is 57% made up of this particular trade, guys. Yet again, there's a divergence, guys. It looks like an ending diagonal. It should break out long. Pound. Well, if the dollar goes short, it will go long, guys. But given what we looked at earlier in the economic calendar, given that those employment figures are so badly out of forecast, it depends. Well, yeah, just have to stick with. Just looking here, TUI down 2.9%. Siemens Energy down 11.1%. Siemens taking a hammering today, guys. It was that's on an earnings report there. Okay, Aussie. Yeah, yet again, depending on what way the dollar goes, that's the direction it'll go in if we get our ending diagonal. But look again, guys, there's that same structure. Looks long. If I was brave, I would just climb into all of these and wait a week or two, guys, and then collect the money. But if you trade like that too often, when you get it wrong, you blow your account. So we'll not be doing that, guys. But certainly one or two trades. So the same with the New Zealand guys. You've got the divergence there. If the dollar goes short, then this will go long. CAD, well, we're still looking for it to drop. There's a bit of it happening there. It's just not as blatantly obvious. It's similar there. It's a little bit different. The structure a little bit different, but it's the same thing happening. You had the initial impulse, and then you've been having this attempt for it to continue up, and it's getting pushed back down. I think that eventually that will break, guys. The yen, has it already started the descent? Possibly. We should actually have the Swiss in there because the two of them kind of run hand in hand, don't they? So let's look at the Swiss first. And yet again, I took this one short yesterday, guys. We're just about in the green with it. And that's as far as I'm going to go with the dollar, guys. Let's see. The only thing, yet again, you see the divergence, guys. The only thing I'm a little bit wary of this situation is that I've got the dollar short, I've got gold long, and I've now got the dollar Swiss short. They all rely on the same thing, guys. And it's not necessarily the best situation to be in. But if it comes off, then the account will do really nicely. If it doesn't come off, well, the gold will come back. It just means we'll be carrying that, drawdown. And with the currencies, I don't let the currencies run because the currency can get you into a lot of trouble if you let them run and run and run, guys. Because often they don't come back down for months, weeks, or years. So you don't want to let a currency run too far in the wrong direction. But with other things, you can let them draw down and then, dollar down your average, as it were, depending on what it is. But we'll talk more about that as we go on. So, yeah, looking for that to drop. US, China, I'm looking for that to drop. Gold, it's slowly but surely creeping up, guys. I'm hoping for a nice impulsive move on it. Haven't had anything yet. Traded this up quite nicely and then got caught by this, guys. I took my profits off up here. And then when we started getting this set up here, when we got to about here, I thought, okay, this is going to break again. And it did that. And then I got caught in the thing. So we're hoping, listen, if it just even gets back up to there again, we'll be in a nice profit with those trades that we took over here. But they weren't gold. It's not gold trades I've taken, guys. It's gold mining trades and ETFs. I'm not trading gold itself. Too expensive. Silver, doing the same thing. It's running flat at the minute, guys. I'm always concerned when something runs flat, particularly after you've had an impulse, because often you'll get the downside dip giving you a zigzag. But I'm already invested. I don't have a lot in silver. I wish I had more, but because of that structure, I'm not putting any more in. If it were to drop to here, I would add some more to it, guys, and try and catch it on the way back up again, the way we did over there. Bitcoin, same story, guys. It's angling down slowly but surely, agonizingly, at death by 1,000 cuts. It's on the way down. At some point, it'll start to recover. But I'm just leaving it alone at the minute. Of a small investment on Coinbase, on Bitcoin, Ethereum, and Cardano, all of which have drawn me down. But I bought them after we had the initial drop. So I've bought them in this flat period, this corrective period. So it's not the end of the world. But I like to get in and out of things, guys. I don't like holding things for months. It's just my personality, guys. I like to make my profit quickly and get out. Make small profits quickly, get out. Keep turning the thing over. US oil, as we said, it's going to run flat for a while, guys. Dropped, pushed back up, down again. It's going to run flat. I don't entirely know why I put that arrow in. Other than maybe you could have it dropping down a little bit, but that's not indicating that it's going down there, because it's not going to do that, guys. Euro CAD, a little bit of a move up there against the CAD, but nothing much to write home about, guys. That's how it's been moving for a long time. The euro will move long when the dollar moves short, guys, or when DXY, should I say, moves short. So at the moment, I don't particularly like trading things like this, guys, unless of an idea that you're going to get a breakout in one direction or the other. But at the moment, I don't have an idea of that, so I'm just not going to trade it. And it's doing the same thing here, guys. There's the structure there, and it's just meandering up through this, which is very, very boring. Euro yen, it's in that. I suspect that eventually it might break out, but the dollar will have to go short. I've still got my eye on this, but I think this will happen this is not going to happen because people love the yen, guys, or because the Japanese economy is doing great things and there's massive influxes. That will happen if the stock markets start to break short. If they start to, not necessarily crash, but start a correction, you'll see that happening, guys. So that's why we keep an eye on it. It's all building up a picture of what's going on to try and see, is the market doing something that's indicating to me that the stock markets are going to start a correction. I don't, keeping my eye on it doesn't mean I'm going to get it right, but at least if I keep an eye on it, I might get it right. Whereas if I don't watch it, I'm certainly not going to get it right. So Euro Swiss, same thing. It's hanging around down there, guys. I suspect that it will eventually come up. Do I want to jump in it today? No. And particularly because of what's happening with gold, guys. If gold is going to break out long, then I don't want to be betting against the Swiss. Pound CAD, it's edging up there. I don't like that, guys. I need to see a pullback in order to get into something. And given those employment figures, I just want to see how the market reacts to those employment figures. Doesn't seem to have been much of pick a word. There doesn't seem to have been much of a reaction so far on the pound, as you can see. So yet again, just from a structural point of view, guys, if it comes down to there, then maybe we look to trade it long. Said the same about that when it was there. If it comes down, maybe we look to trade it long. It's come down a little bit, and it could certainly go long from there. That's not enough for me, guys. Maybe that little breakout there would have been okay. You've been back down to zero now, and if you moved your stop loss, chances are you would have been out of it. It just depends how much. Remember, we're on a 4-hour time scale here, guys. So that would have been a big enough move to get your stop to zero. the chances are you'd probably be, if you didn't take your profit up there, you would have been back down almost on zero, maybe on zero, hoping that it goes long again. So I don't think there's much to trade there. Pound Swiss. Let's clean it up. Just as a precaution at the moment, because of what's happening with bonds, American bonds, guys, just be careful of trading against the yen and the Swiss. It doesn't mean that anything's going to happen, but I don't see the point in taking a trade that I'm not 100% sure of when there's potential massive downside risk. So in other words, if the markets continue to take money out of the if the players continue to take money out of the stock market and put it into American bonds, then you could well start to see money get into the Swiss and the yen as well, guys. And for that reason, I'm not going to try and trade those at the moment. Pound euro, just continuing in this. Yet again, as I said yesterday, if it drops back down to here, maybe you look to trade it up. Pound yen, there's another drawdown in the yen there. Structurally, it looks like it wants to go long, but yet again, what we just said about the yen, I'm going to wait and see what happens there. And the same with this Aussie. I would love to trade it long, but I don't think the timing's right yet. Could be a bit more downside to it. Aussie, New Zealand. Yeah, well, this is the one I got into the other day, and I'm now sitting. Well, it was 10% down yesterday, 8% down today. It's just one of those things, guys, that happens every now and again. And this is where inexperienced traders think that the market's against them. Because I haven't traded this pair for months, and then the day that I trade it, it goes like that. And you're 10% down within an hour. And it's just madness, but it's the way it happens, guys. So I'm just hoping we get one of these, but it gradually comes back up again. You know, if it does that, I'll just get out of it. Other than that, I have a stop loss sitting under here, not too tight. You know, you got to give it room to breathe. But it's maybe under there somewhere, guys. I don't know exactly where it is. We go out to the 4 hour, I've a better idea. Yeah, it's between there and there, so it's sitting in there somewhere. So if it continues down, I'm going to be out of it. So I don't want to end up way down here somewhere, and maybe a year's time I get my money back. Forget about that, guys. With currencies, get your stop losses, give it a bit of room to breathe. I don't want to be prescriptive and say, hey, 10 pips. You get guys out there going, hey, put your stop loss 10 pips above the highest high or below the lowest low, and yeah, you get spreads open up, guys, and then you get thumped if you get them too tight. And just on that, and anyone who's been listening to me the last few years is going to be bored with this story, but talking about spreads, guys, particularly for anybody that's new to trading, struggling to find it now. Wasn't away back then. It was last year, so it was in here. In here somewhere. I think it was this. Or it might have been there. Okay. Let's go down to the 4 hour. I think it's in there somewhere. Just want to show you this. Yeah, it would have been here. So last year, before we had our debacle with the pandemic, I was calling silver short from up here, and I took it short from here because we had that, and we had a pullback, And I said, well, because conditions were that I thought it was going to go short, I said, well, this is ideal because we should get a zigzag, and I was looking for something like that, guys. So I had a stop loss sitting in there somewhere, which on a 4-hour time scale is a long way above that. And you can see price didn't get to there, but it was stopped out because the spread opened. There was a big volume. And when the volumes get high, the brokers widen their spread to protect themselves. And obviously it's done automatically with the computers do it, guys. And I was stopped out for zero and missed that trade. And that was a massive trade, guys. Now, I'm not suggesting that I would have caught the whole thing the whole way down. It just depends where the news started. That was already into March. So the news was already coming through then about the pandemic. Not entirely sure that's the exact spot, guys, but it was one of those zigzags. It could have been there or there, but it was one of the zigzags that I think it was that one. I missed a massive move down because the spread opened up and it was stopped out, guys. So the idea of putting things 10 pips, above your all-time high, the highest high, and you'll lose a lot of trades like that, guys. There's a lot of BS out there, folks. Okay, let's get on with it. Said I wasn't going to do this today. Said this was going to be quick today. Now, I can't even remember where we were. Where were we? Oh, yeah, we're talking about the pound. They've all got this little structure here going on, guys. See it? That. There it is again. Not so much there. That's the Swiss. Pound euro. I think the pound, don't be jumping into the pound today, guys. If that drops, where was it? If that drops, maybe we'll look at it Monday, Tuesday next week. Aussie yen. Yeah. Aussie New Zealand, there's where we were. Hoping for this to come back up. Aussie Swiss. Wouldn't be convinced by that one. Aussie CAD, a little bit of a breakout there, guys. But if we look at how it's been moving, would you want to really buy there in the hope that it's going to break out? I wouldn't. We're on 4 hours, remember. If it comes back down like that and you still think it's a good trade, then buy it from there at least. So if it comes back up to there, at least you'll be in a position to put your stop to zero in case it comes back down again. I'm not confident enough in this to actually take the trade, but there is potentially a move down there. CAD Swiss. Now, I did say a while back that this was going to range, and when it was up here, I said, well, if it drops back down to the bottom of that range, I'll buy it to trade it long. But given what I've just said about my concerns about the Swiss and the yen, safe havens, remember, guys, I'm not going to take that trade, guys, because I'm already getting drawn down on the market. You saw we're down 1.3% or whatever it is. If the market continues down and I'm trading that in the wrong direction, and this takes a boost from that drop, move into safety, then I'm just compounding my problems, guys. So I'm not going to take that trade. CAD yen, and potentially the same thing here, guys. If the drawdown continues to happen, you could see a boost to the yen, which would move that in that direction. And if I'm trying to trade that way, it's only going to compound my problems. So I'm going to leave that alone. Your trades, you've got to balance your account, guys. You can't just take this trade and that trade and that trade and that trade and hope that you're going to get it right. You've got to balance the thing. You've got to understand what risks you're taking. New Zealand yen, same thing with this, guys. I would love to trade it long, but just in the current climate, listen, if next week the markets all start moving up, then obviously we could start. Oh, no. Yeah, we could start to look at that. That's what I'm saying, because then the fear of the rush into the yen wouldn't happen. Okay, I hope you understand where I'm coming from here. Oops, that's the wrong thing I've moved there. This is just running flat at the minute, guys. Potential upside to it, but I'm not convinced. And New Zealand Swiss, same thing, same argument, same discussion. We had that nice move on. That's a move against the New Zealand. Is that moves on the Swiss there, guys. That moves on the Swiss. And the weird thing is, what's the timing of that? That's the 7th of July. What's the timing of that? It's the 14th of July. Okay. So that was 2 weeks later. That's the 13th of July, and the other one was the 7th of July, wasn't it? Yeah, that was the 7th of July. So it's you need to be careful that you're, I saw that and I thought to myself, but the New Zealand went long the other day. How come we've got that? And you just have to make sure you're comparing apples with apples. There's the New Zealand going long there, guys. That was that move the other day, 13th and the 14th, and that was a previous one. Okay. Let's have a quick look at GDX. I'm not in GDX at the minute. I got out of it the other day because it was a few dollars up, and I just thought, let's take some of this risk off. I'm kind of thinking of if this breaks out. No, I'm not in it. Let's have a look at the VIX. Bit of a spike yesterday. Nothing much to write home about there. Okay, guys, that'll do for today. I did say it'd be a little bit shorter. Nothing particularly conclusive at the moment. We're in the drawdown situation. I'm kind of just hunkering down, guys. Don't want to take too many risks at the minute. When circumstances change, we'll start talking about like trading that, and that will also apply to stocks. I haven't bought anything new recently, so I'm not talking about it. When we start looking to buy into things, we'll start releasing the little videos on a daily basis of what stocks we're looking at, what we're buying, etc. So just bide with me, guys. We'll get there. Okay, that'll do for today. Bye for now.